Welcome to the Terri Talks. I'm your host, Terri Brown, and I'll be talking on Tuesdays with real people about real challenges and solutions in real estate investing. Good afternoon, good people. So excited to be here for another episode of Terri Talks, where we talk with real people about real challenges and solutions in real estate investing. Our sole objective is to help all of us increase in impact, influence, and income. And so I am always excited to be here. Thank you for trusting me with your time and knowing that anything that we bring to you is solely designed to empower you and educate you, equip you, and to equip you to execute. Right? We want you to be able to execute. Over in these parts, we don't believe in stockpiling information. We believe in implementing on the information that we've heard. Additionally, we don't believe in stockpiling education. We believe in executing on the education that we've heard, because you get points for showing up and hearing the information, but you get manifestation from implementing on the information that you showed up to hear. Amen. Amen. I am super excited about our guests. I know you guys hear me say that, but anytime I am able...
She really means it.
And anytime I'm able to sit under good teaching and sound education and principled information for me, and I pray that that's the same for you all, it just does something to my spirit, because it speaks to my ability to grow. And if we ever get tired of hearing certain things, I think you put a limit on how much you can grow. And I had a bishop say, sometimes we don't need to be informed as much as we need to be reminded. So this may be new information, or it may be information that you need to hear again. Either way, I believe that this segment is critical to any investing activity. You know, in my programs, inside of my community, I'm always suggesting that everything you do should be operating from some type of strategic plan, and more importantly, a financial plan, because these vehicles are designed to increase your finances. They're designed to make you money. However, if you don't have a vision for your finances, then the activities are going to be scattered, or they're going to be misguided, or they're going to be a waste of time, right? And so whereas, you need $560,000 a month, if you don't know what you need, then you can end up doing activities that only yield you $500 a month. So that's going to take you an increasingly more amount of time to get where you actually want to be. And again, this special guest, he has been a friend to me, he has been a mentor to me, he has been a colleague to me, and he just brings it. He brings it, and he brings it well. And so without further ado, I want to introduce our special guest for today. His name is curtismay. You can clap if you want. You might be in your car driving, so don't take your hands off the wheel, but just internally, just celebrate what the Lord is about to provide you with today. He's definitely a gem. And I would like for him to introduce himself to my audience. I think even though I've been on his show, I think this is the first time he's on my show. And so please introduce yourself to our listeners who may not know you.
So, hi, my name is curtismay, and I'm a financial strategist, principles-based financial planner, and infinite banking strategist. And my goal is to help our clients. One of the things that we teach is that your economic situation is a matter of choice, not chance. And what our goal is to educate people about finance, so they can be empowered in this conversation called money, is what we're hoping to accomplish today. And, I've been doing this since 1985. Believe it or not, I was 13. I was like 𝗛𝗲𝗍𝗽 Howser of finance. But I realized the NBA was not looking for 5'11" shooting guards. Well, he was 12. That would make me still relatively young, which is not true. And, but I started as a junior in college, and I realized the NBA was not looking for 5'11" shooting guards. And I actually was turned on to the financial services industry. And I was like, I am a was a closet nerd. So I really like numbers. I was blessed because I come from an entrepreneur family. And so I never got that go get a good job talk. My dad told me never making money work for somebody else. So I saw an opportunity in the industry that intrigued me at 2021. And basically pretty much I've been doing it ever since. That's all I say about that.
Listen, I think you caught me off guard because you guys will see this man is not short on words. So that is probably the shortest you'll ever hear him, give an answer on. So
I'm trying to break it up.
Okay. So, we're going to delve in, right? And I'm excited about this conversation because it's a needful conversation, and definitely for new investors and or seasoned investors. I strongly believe that this should be your starting point. And even as you grow your money, it's a place to keep coming back to ensure that you are headed in the right direction. One, and two, you are leveraging as much as you possibly can. So, Curtis, I'm going to start off like this, coming in hot. What differentiates you between traditional financial planners and yourself? What is the differentiator?
Well, so there's two schools of thought, glad you asked that, when it comes to money. So there's typical advisors, most of it's based on what I call the accumulation theory. Okay. So the accumulation theory, if you're hearing it, you're hearing buy and hold, you're in it for the long haul, max out your 401k, dollar cost average, get out of debt, including your mortgage, and buy term investor different, buy term insurance and investor difference, in mutually funded IRAs or whatever. So most traditional wealth managers are really focused on their investment advisors. They want you to put money in mutual funds. Okay. And so for your listeners, planning is different. So what we do is I have a principles-based approach. So the people that find me, their objective is work optional income. And so what principles are, and you hit them now, we hit them later, but principles, my framework is I teach principles that help our clients become and remain financially free. I'll just hit them real quick now, because this is the difference, because there's a different school of thoughts. There's the velocity method. Okay, so there's accumulation theory, typical advice, and then there's the velocity method. So if you look at corporate finance, they don't teach the stuff I just said. They focus on velocity, moving money through assets, right? So for example, velocity of money in real estate is the Burr method, right? Because you're buy, refurbish, refinance, repeat, take the new money, move it into a new project. That's velocity. That's nothing to do with accumulation. And, typical planning is based on hope, right? Hope the market goes up. Hope. I was watching, the Star Wars story. It was like revolutions are built on hope. Okay. But financial planning is not, or should not, I build planning on certainty and guarantees, right? And so when you're talking to a principles based or what I call the velocity method, our focus is on A, velocity, B, cash flow, right? You want to buy assets. What's an asset? Something that puts money in your pocket. So we try to help our clients build a portfolio of cash flow engines, things that send you a check, because your objective is not retirement, which is some made up age and made up number, which is not true, because you can't accumulate enough money for retirement. That's the big lie. Okay. And so, but financial freedom is the capacity. What is that? What is, when you talk about upfront, most people, even investors, don't even know what they're trying to do. I was working with a woman, and it took me 20 minutes to get her to articulate why she was doing real estate. What did she want to do? I finally, 20 minutes later, said, I want $15,000 a month. Okay. Well, how much do you make per property? I make this. Well, how many of those you need to get $15,000 a month? Blah, blah, blah. Oh, there's your plan. Okay. That's your using real estate as an asset class, right? The other part of the accumulation theory. Now you're not trying to get out of debt. You want leverage, right? Because there's good debt and bad debt. You want risk management. So you love insurance because insurance transfers your risk away. And then institutions buy permanent insurance. They don't write term insurance, right? And so what I discovered probably 10, 12 years into business is that the corporate finance or the velocity method works in personal finance and it works better. So the difference between me and them is I focus on cash flow, not on accumulating what I call paper assets in mutual funds, hoping the market goes up. You know, I teach people to operate based on principles because principles work no matter what. We put together game plans. Your plan has to work no matter what. Have to work when markets are up. Has to work when markets are down. Has to work when markets are sideways. Has to work if one of the breadwinners die, get disabled, get sued. You know, that's a plan. You have to have a bulletproof. You have to build. We call it protection. Yeah, PSG, protection. You have to start with defense. I got so many acronyms in my head. Then it's savings, then it's growth. Most people start with growth and they're always chasing investments, but you have to play defense. I'm the defensive coordinator. Okay. I always tell people Terry's offense, right? Investing in real estate, buying assets. I'm defense. I'm here to make sure you don't lose money. So principles are, and I'll end with this segment with this. There's 5 principles. Save. Let me define savings because people think, oh, I'm putting 15% in my 401k. That's not saving. Okay. That's investing. And I could make a strong argument. It's really not investing and speculating, but that's another topic. And so savings. Let me define savings. Safe, liquid, accessible. Accessible means you can get to it. Guaranteed. So you can't lose money. Maximum protection, right? So you got to have a plan that works no matter what. Sick, live, die, get sick, get sued. You know, so you have to put a moat around your castle. That's protection. You want to have legacy. We involve people in legacy planning because my objective is to help our clients create a legacy of wealth and the wisdom to go along with it. Okay. And then there's the 4th principle is most people are way too illiquid. So we want 6 to 12 months of liquidity of either your expenses or your income in cash or cash equivalents. Now, the first 90 days is your emergency fund. Everything above that is your opportunity fund, but I want you to be liquid. You got to have dry powder. People say, oh, I got $10,000. Can I start investing? How much is your income a month? 10,000? Okay, no, you got a month, right? So I don't even want you to put your 401k. Those of y'all still on the fence trying to be investors, I don't even want you to fund your 401k until you got 90 days in cash and you're in an emergency money. Because if you don't have money, something comes up, you got to go into debt, right? And then the 5th principle is velocity. Right? Are you buying assets that generate a check? So when we look at our clients, we say you measure backwards. So if I meet you today and your cash flow is, net, passive, I have a client, she's making like $4,000 a month off of her rentals, right? Has a great job, makes $300,000 a year. So we do these kickoff meetings at the beginning of the year. So we're having this conversation 12 months from now. What is it that you want to, have happen? She says, I want another $4,000 a month. So she wants $100,000 a year or $8,000 a month in passive income. So that's specific, right? So, all right, what do you have to do that? Well, I want to do apartment buildings and but so now my planning is designed to support that because typical planning is designed to send money away from you, right? And put it in little silos, SEPs and 401ks and things you can't touch. But if you're listening to this, you're trying to be an active investor. So you need access to your capital so that you can that makes money.
Yes. Okay. And we're going to get
I set people up to do that.
Okay. And we're going to get there. I believe it's safe to say in order for your planning to occur, one would need a vision and goals for their finances, right? So speak to the importance of having a vision, a financial vision, and establishing financial goals.
See, so it's hard to reach a target you don't have. So let's start with that. So, this is the part I should have finished when we started. I'm known for helping families and business manage their money so they feel safe and free at the same time. And I try to focus on 4 things. A, you want to know where you want to go, but you have to start out with, you got to figure out where you are right now, right? So it's like a GPS. I have a service called a financial GPS. And so, they don't even really know where they want to go. Okay. But if we figure that out, now where are you? What is position A, right? What do you have now and what's working and what don't you like about it? So this goes back to that, right? You want to make sure do you have cash flow? Is your money flowing? And you want to be protected no matter what. So that's the starting point. But I think that it starts with, because what happens is if you don't know what you're trying to accomplish, so if you tell me, well, Curtis, I want X amount of cash flow a month within 10 years. I want to leave my job in 8 years. Well, okay, that's a very specific type of investing that will do that. Like, will maxing out your 4K get you there? No, because it's not designed to do that, right? It's not designed to cash flow. Typical advice really focuses on getting you to do what the financial institutions want you to do, right? And so here are the 4 rules of the financial institutions. They want your money. They want it on a regular basis. They want to keep it there as long as possible. And they never want to give it back, or they want to give it back as slow as possible, right? So, but your goal, I think, if you're listening to this, is passive income greater than expenses. So every financial product is built with those 4 rules in mind. Now, I'm not throwing them under the bus. You just have to have your own agenda. Otherwise, you're going to fall into their agenda, which seems like status quo. But somebody said status quo is for Latin for the mess that we're in. Oh, the mess that we're in, or something like that. That's not what it means, but that's a joke. These are jokes, people. I can't be totally serious for a long period of time, but that's the thing. So, it's that. So we try to help people determine where they want to go, because what you're trying to do would dictate what you do. So you don't want to, if I was I won't name a company, but let's say I was a wealth advisor and you had $500,000 or $1 million with me, and Terri came to me and said, Terri, you said, Curtis, I just got this great apartment building I bought. I need to pull out $150,000 out of my managed funds. Am I going to be excited about you taking money out that account? No, because I make money off of assets under management. Even though your thing is better, there's not a way for a typical advisor to make money off you. So they can't advise you on asset classes outside of what I call paper. The closest you'll get to real estate with a Wall Street is a REIT, real estate investment trust. And I'm not a huge fan, because if Wall Street's doing it, rest assured most of the profits are going to them, I believe. Yeah, I could be wrong. So do your own due diligence, of course.
Yeah, no, I totally agree. And so I posed that question, one, to really highlight the importance of, you need to have a financial vision. You need to be able to establish some goals. Oftentimes people just want to jump into doing, and they're like, I just want to flip. I want to be a flipper. That's very limited. And we get into this space for the long-term gains, right? We can get some short-term gains in between there, but this is a space designed for legacy and wealth building, right? So, those are things that will cause you not to be in a hurry or to look at it as a sprint, but it's a marathon. And what I love about marathons, I've ran about 3 of them now. Each mile marker, there are some things that you can get, like a drink of water. So there are intervals of spaces where you can get some influx of cash, but you still should be playing for the long-term goal, which is that 26.2 miles that you're running for, right?
And how do you know if you're winning, right? What are your mile markers? Are you growing? If you're just flipping or wholesaling, then okay, the objective is for you to, people say they want to do it, they want capital, they need cash flow, right? But you're okay, so that is part of your overall strategy to capitalize yourself, where you can make big windfalls, but that is not your long-term plan, because you're as good as, I had a guy who was making $1 million flipping. He wasn't wholesaling, he was flipping, but he says, look, I'm not rich. I'm working all the time. He was doing 100 flips a year, and he never saw his family. And he realized that he was only as good as his last deal. And he switched to, I need to hold this stuff. So he really focuses in on buy and hold and notes, because he wants cash flow. So every time I call him, he's on his of a nice day, he's out in Delaware, he's on his boat somewhere, chilling, because every month, boom, he's got that cash flow coming in. And that's why I say financial freedom is capacity. But if you're working with a traditional person, all they can do is sell you what's in their grid, and none of that is designed for you to become financially free. So that's why you got to know what you want, so that when you see an idea somebody's giving you, is this going to help me get from point A to point B? And you should have a plan. And if it doesn't do that, then you don't entertain it. It's not in your wheelhouse.
It's not in your wheelhouse. And many of my listeners know I'm a licensed general contractor, and I've had monthly, quarterly goals. One, as for business sake, and then two, as a tax strategy. And so there are times where I can't take little small jobs because they don't allow me to meet those goals that I need based on the overall strategy for me and my family and the lifestyle that I want today and tomorrow. You know, I'm a big proponent of not every generation starting from ground zero and or starting with amounts of debt. Right? Like that's just something that we can guard against while we have an opportunity. And so we should be diligent in that way. And so again, I just wanted to bring that question. I wanted to pose that question just because, again, to me, it doesn't make any sense to just jump out and start investing without having a direction for how to do that. Okay, my next question for you is, what are some important considerations in financial planning? So what are some things that people should consider? Like when they come to you, either they should come with or they should expect when they get to you.
So I think that so if somebody comes to me, so it depends on where they want to start. Sometimes it's just a conversation and I just want to get to know you to see if we're a good fit, if your philosophy, because if you come to me and you're a stock jockey, Curtis, I want to get a better return on my mutual funds or my stocks, I'm probably not a good person for you. And I'll tell you that in a heartbeat. I got people that do that, but I don't do that. I'm defense, right? So what I want you to know, like people that work with me, I need you to be serious about your money. I need you to be coachable. And, I'm going to ask you for some stuff because I think that in order to get a good view of your situation, I personally start with cash flow. I want to see how your cash is flowing, what's coming in and what's going out, because that's where the game starts. Every time you get a paycheck, there are decisions that needs to get made. And then what happens is if your inflows, if your outflows are greater than your inflows, so I might as well give credit for this statement. Myron Golden says, then your upkeep becomes your downfall, because every time you're spent, you make $4,000, you spend in $5,000. Well, the only way you can do that is withdraw your savings or go into debt, right? Because and it's not that people don't have the money a lot of times that I'm working with, they just don't have a system for tracking it. So we start there and then we flow backwards into, okay, now what does your balance sheet look like? What are your assets such that it is? What are your debt such that it is? Do you have proper protection? So what I want to do is I want to get a good idea of position A. So we give you a little questionnaire where we can see that. We actually help people answer what we call the 4 questions. We call it the financial GPS. The question number 1 is, what rate of return do you need to earn on your saving and investment dollars to live in the future like you live today, adjusted for inflation? Okay, that's question number 1. Question number 2 is, how much should you be saving and investing on a monthly basis so you can live in the future, adjust for inflation, like to live in the future like you live today? And then I'll ask them, do you know the answer to that question? They go, no. Would you like to know? Okay, if I'm really going through the whole thing, I'm just shorting it. Then
because I was going to ask you, I'm imagining you're using some matrix to determine this. So,
well, I have a software. So when I ask the questions, I can answer them in about 15 minutes. So that's where we start. Okay, because hey, you're on target, you're short, then I'm in position. I can stress test it, right? So let's say you're going to save. If everything's okay, you'll be okay. But what happens if you die? If one of your spouses die, okay? What happens if there's a market downturn? We call that sequence of returns risk. If you're just focusing on the accumulation theory, what happens if, so I can stress test. We call them hazards. And so what we'll do is we'll look at it and this is what I mean by building a plan that works no matter what. So you got to be able to stress test it. I ask them, how long would you have to work? And the 4th question is, if you don't do anything different, how much would you need to reduce your standing of living to make your money last as long as you do? Okay. Now, part of when I do that, I do it to show people that the accumulation theory won't work. Like you're not, if you had $1 million and the safe withdrawal rate is 4%, then if you were making like 90 grand a year, and let's say you had a 401k with $1 million in it, well, 4% of $1 million is 40,000. So you're still 50,000 short. So you really need to buy other assets to make up that shortfall, because you're more than likely, you're not going to do it. I've seen one person, I got a client, well, he's not a client yet. We're working and make 1.1 million, 2 doctors, and he saves 20% of his income. So according to his thing, he'll have like, now he thinks he's going to get 10%. I'm like, okay, that's a bit aggressive. And, but if everything works the way he works, he's a total stock market junkie. He'll have like $20 million. And he's telling me, I'm going to be the lower tax bracket. I was like, dude, I don't think so. So I'm trying to stress test his thing, but you can't tell him nothing. And so that's not a good, I like him. So we talk, he's like, big Giants fan. So I called him up yesterday. I was like, hey, so thanks again for Saquon. So really cool guy. And so we'll talk, but he's open. I said, listen, I'll talk to him on once a quarter. I said, look, if I see something that will help you, is it okay if I call you? Says I have his stuff, because he don't know I'm going to send him books. Like when the student is ready, the teacher will appear. But as long as you're not a knucklehead, I want to help you. You know what I mean? So, and that's how you prepare. So the considerations are you coachable? I'm the type, I don't care about assets under management. So I'm not like Merrill or whatever, or you got to have $250,000 of investable assets. I don't really care about that. I need you to be coachable. I can't steer a parked car. So my average client probably has household income of 100 to 200,000. And because what I do that's different, this is where I think that we're also different, Terry, is I'm not giving investing advice. What I do that's different, see, there's 2 ways that somebody in the financial space, here's an answer, best answer, how am I different?
Well, wait, I'll write it down so you don't forget, but don't forget the considerations. So, and then we'll come back to the difference.
I mean, be coachable.
Because you started. Okay, yep.
Be working, because I can't steer a parked car. Okay. All right. I can't do no financial planning if you don't know finances, right? So that was part of that. Be willing to learn, because I give homework, right? So you're going to read stuff, watch stuff, listen to stuff, because it's your money. It ain't my money. Like if I give you an assignment, if I say, look, I want you to read Becoming Your Own Banker. You say, well, I don't like reading. I might give you another way. I'm going to test you, because if it's your money, it ain't Kurtz's money. So it can't be more important to me than it is to you. So I'm the coach.
That's good.
But you have to lead your wealth. Now I know more than you, and listen, I do this stuff. So whether I see you again or not, Curtis is going to be financially free. Curtis is doing all right? So I don't need you, but I have stuff that, because my coach asked me, who are you going to help make their life better today, is what I ask myself when I'm sitting down with somebody. Because if you don't want to go here, so I'll start out with this. I was like, here's the end of the movie. Here's what I'm trying to do. And tell me if you want to go here or not. Okay, because if you don't, then we don't need to really talk more than like the 5 minutes I started the call with, right? So I want you to be free from debt to others, okay? And so when I say that, I don't mean get out of debt. I mean, I want you to be the banks. If you owned your own banking system, you're your best customer. So that's my pillar.
Okay, we're going to get there.
Yeah, so I also want to say about that. So pillar number 2 is, do you want to go here, is to have ready cash, liquidity. Pillar number 3, this is where you come in my mind. You want to have passive income you don't have to work for and you can't outlive. And then the 4th pillar of a strong personal economy is a legacy of wealth and wisdom. So now if I'm talking to somebody and they say, well, I don't care about leaving money for anybody. I don't have any charities or any loved ones. I don't care about my family. That's a non-starter for me. Okay. Because I'm going to make 2 assumptions. A, you love your family, and B, you're not stupid. Okay. So if I figure that out within the first 10 minutes, our meeting's over. How's that for consideration? All right.
That's good. Okay.
Okay.
Well, you gave other considerations: be coachable, workable, and be willing to learn. So yes, that totally answered.
That's my criteria.
And that's great. That's great. So we're going to pause a moment to just acknowledge our sponsor for today. Our sponsor for today's episode is BBI Consultants.
Are you tired of spending hours trying to figure out why your business isn't growing online? Imagine if there was a proven system that could attract leads, close sales, and keep your customers coming back. Hi, I'm Brianna Kelsey, the founder of BBI Consultants. As a business owner, I understand how overwhelming it can be to navigate today's digital marketing landscape. Between websites, email campaigns, social media, and sales funnels, it's easy to feel stuck.
a marketing and advertising firm. Their information will be inside of the show notes. So you'll be able to tap in for all of your marketing and advertising needs. With that, we also love to, I guess I would say on this show, eliminate the excuses. And so Curtis has a freebie that he gives out, and I would like for you to share I know we're going to have a link, but for those who may be driving, listening to this, can you audibly give the link?
Yes, I want you to get a free report, Creating Wealth with Using the Velocity of Money. Okay, it's a free report. And if you can get that by texting Be the Bank, BETHEBANK, all caps, all one word, to 55444. So that's Be the Bank to 55444, and we'd love to get this special gift in your hand. We also have this will be in the show notes because I don't know the URL for it, but we have a website where we'll give you our financial. It's like a survey, a quiz that you can go through, a financial assessment.
So like an audit, audit assessment, sort of thing. And with that, if you want a deeper dive, we're going to give you some information at the end. But I've been working with Curtis, I guess, for the past couple of years. And even in my mentor programs, my coaching programs, he is a pillar. I have my clients sign up with him on a monthly basis to be able to stay connected to the information, because the reason why I started doing that, one, I started off by saying your financial vision is everything. And what I found in the traditional financial planning brokerages and setting, they don't really ask that. They have been more concerned in kind of putting me where they think I should be. And then they'll ask me, am I okay with it? Well, first of all, I don't know if I'm okay with it or not because I don't have the education.
What's your risk tolerance? So, how much are you prepared to lose?
So it's important that you are educated along the way, because the one thing that real estate investing does afford you is control. And our objective is to be in control versus and leveraging other entities and systems versus dependent upon them, right? And so inside of our collective, which you all are familiar with, where we are helping you establish business and good business practices, including the business of the business, helping you invest in real estate, and just helping you build legacy and creating your own banking system. Inside of that, we have experted folks like Curtis, who acts as a contributor to that overall community. And you want to start, and definitely in this time and season, and I won't go into politics too much, but you want to make sure you lean in communities that can help you multiply in various areas of your life. And so don't forget that Built to Last, and that'll be available to you at the end, has a collective community. It's called the Legacy and Wealth Builders Collective. It's $47 a month. And right now, in light of a concerted effort to erase our history, I am allowing a 2-for-1 in the month of February, so that you can kind of get connected, so that you can build, and not just build, but build a sustainable business, because the IRS, the tax code, is designed for business owners and real estate investors, like hands down. And so we want to help you be able to build in a strategic, smart, solid, and sustainable way. We want to create an environment where you can learn how to invest in real estate, but not only learn how to invest in real estate, but you individually, but in a collective setting where you're pooling your resources together. Right now, we're investing in roads and hotels because, to Curtis's point on, I guess, a mentor of his, you want to be able to build quickly, right? You want to be able to have liquidity, and you want to be able to have multiple streams of income, because one is too close to none. And so what we teach you is not just how to get into business. Everybody knows how to do that, but how to be a business owner so that you can scale, not just be an investor or do investing, but how to be an investor so that you can duplicate those efforts over and over again. And you can build and answer the call of providing an inheritance to your children's children. So you don't want to miss out on that. You want to get in community that can help elevate you and celebrate you versus just tolerate you, right? So with that, Curtis, you offer so much by way of education, but you don't just educate, you equip folks to execute on a portfolio that is profitable, right? And you alluded to a little bit earlier, or I think this is where you were going. It's what you call your principles. And I'm going to get the sequence wrong, but I want you to elaborate. It's like principles, strategy drives principles, and principles drive tactics, or principles drive tactics and tactics drive strategy. I know I got it all messed up, but I think that it is an important system and a system of continuity and progression that ensures profitability in this space. Can you speak to that and correct me? Because I know I jacked it up.
Yeah, I mean, so we start with, when I say I'm a principles-based planner, because principles don't change. Like, so the 10 Commandments, those are principles, right? That if you want to live a good life, godly life, and so your days will be, honor your mother and father so that your days will be long on this earth. That's a principle. Right. And so it doesn't matter what religion you are. If you follow that, that's going to work. Right. So there are financial principles. If you ever read I'll give you another one outside of what I do, but I basically teach this. If you ever read The Richest Man in Babylon, the second chapter, 7 Cures for a Lean Purse, those are financial principles. Like if you follow them, you won't have a lean purse, or in today's language, an empty bank account. OK, so I teach that. That's why. So you want to be principles based, because principles it doesn't matter what the markets are doing or this and that. You've got to, because principles, all successful people operate by, otherwise when stuff happened, they would be like, oh, I've never seen this before. So you got to follow stuff that works, right? So principles, which is how you think, your philosophy, drives strategy. Okay. Strategy is what you do. Okay. So for example, in order, principle 1 of my game plan is save what? 15-20% of your gross income. So now the strategy for that, and we'll get into this later, banking, how to be the bank. Okay. But that's a strategy. Actually, that's step 2, because if you can't spend less than you make and save a portion of income, you can't be the bank, because it's a saving strategy. Okay. That's what you do. And there's a whole money management system around the banking strategy. And then strategy drives tactics. A tactic is something that you buy, right? So principle, save, strategy, how to be the bank, tactic, properly structured, dividend paying whole life for the mutual company. That's what you buy. So the problem is a lot of people confuse the product, a tactic, with the strategy and have no principles whatsoever, right? And so yeah. What I try to do, so every product, because I offer financial products, but it's kind of like if you read Simon Sinek, Start with Why. So everything I think, this is the framework how I think about it, right? Why, starting with why. So going back to your goals, why do I want to be a real estate investor? Okay. Then the how, that's the strategy. So there's a lot of strategies to make money, in various asset classes, right? And then what is what you do, right? So principles drive strategy, or why, how, and what. So that's how you back into it. And so what happens is when you get a financial product, so to speak, attacked it should be a result of your knowledge, not a substitute for it.
That's good.
Right? And so many people are just chasing hot tips they heard on 30-second sound bites. Oh, I want to trust. Oh, I heard I could, if I have a business, I could get a $100,000 G-Wagon and write it off my taxes. Well, there's more to it than that.
Yes.
Right?
Amen.
You got all these hacks.
Say it for the people in the back, sir. Say it for the people in the back.
You can't let TikTok do your financial plan. Oh, I want to trust. Well, do you have any life insurance? Do you have any other assets? No, but I want to trust. I want to build multi-generational wealth. Well, okay. It starts with having, let's say you're 20 times your income with life insurance. See, that's my second principle, maximum protection, right? Protect, you got to protect your stuff. You got to protect your health. You got to protect your life, and then you got to preserve your wealth. So those are products. A trust is a tactic. A will is a tactic. Right. And so term insurance, what's the goal of that? You want, because it's not either or, it's both. Your goal is the most coverage you can get for the least amount of money, but it's got to be convertible in the whole life. So I'm mixing up different stuff, but that's the planning part. You see what I mean? It's, but it all starts with, it don't start with somebody pulling out a product brochure when you sit down with somebody.
Absolutely. And just with that, because you mentioned it in different spaces, tell us a list of products that you have. Now, we don't want we want to put it in context, right? And what we're suggesting is that there are levels to this if you're going to get the most out of the offering itself, right? And so, but just because you referenced it, can you give me a list of the financial products that you
Yes, let me say it this way. So let's say, because I want to put it in context. So let's say, Terri, you play golf. You play golf. Actually, don't you? Right. So let's say you got a chance to go play in the Masters, golf's most prestigious event, right? And you're a man. I'm just kidding. All right. So
disrespectful.
All right, I'm silly. All right. So I got you. So you got to go to play in the Masters. I got two things to give you, but you can only have one. I could give you the clubs of any of the best players on the tour, or I could touch you on the shoulder and give you their swing, their muscle memory reflex, their knowledge of the game, their course. What would you rather have? The club, the swing, or the clubs?
The swing.
The swing. Okay. So now let's bring this back to your questions. When you look at a financial institutions, they are club manufacturers. They manufacture financial products. So most people ask me club questions. Curtis, should I get a 15-year mortgage or a 30? What do you think about Bitcoin? Should I get term, IUL, or whole life? Those are club questions. Curtis sells clubs. I can offer any club on the financial club rack, so to speak. Oh, life insurance, disability insurance, chronic critical illness, annuities. Okay. I can introduce people to mutual funds because I don't want to be in that business anymore, but I understand. I was a registered rep for 15 years. Okay. So I know a little bit about most things. I'm a holistic planner. I just give it to specialists. So I'm the quarterback of your financial team. But, my fee for service, most of my fee for service is built into the transaction. So as we put together the plan, our process, then we help you pick the clubs, the products. And then the companies pay me, my fee for service is built into the transaction. So if it's that life insurance, is that permanent insurance, is that term insurance, is that disability, and, could it be an annuity? Could it be long-term care? Those are the clubs. Those are the products. So I can facilitate all of that. I can facilitate, we have a partner with trust. So we help get the trust done and your wills and your portable wills. So when we get done with you, you're going to have a plan where all this stuff bolted together.
Okay, give us some other products. And again, I'm doing this.
Those are the products. Then the products.
Well, you got the will.
We have the wills, the trust through my partner Legacy Lock, the portable wills. So that's with the partner. I've got bookkeeping partners who I'm not going to name because I have a few of them. If they need an accountant, we'll kind of sort that out because I'm the quarterback. So I see everything. And then when I see a deficiency or they'll out and out ask me, then I'm going to introduce them to somebody to solve the problem. But they need to work with me because everything needs to be done, not in a vacuum, but within a context of, does this help you get from point A to point B? If it doesn't do that, then, I will never try to sell you something. And I don't think sales is a bad thing, but I won't sell you something just to be selling it. If it doesn't move you forward towards your goal, then we're not going to do it. If I see it, and I ask people, listen, do you want help? Like if they fight me on stuff, it's like, all right, we're not a good fit, on stuff because you reached out to me. I'm the doctor. So you asked me, I'm telling you that you need to take 2 of these and call me in the morning. I don't take pills. All right. Well, what you want me to do? Okay.
All right. We got you. We understand. Again,
that's Coach Curtis, right? So Coach Curtis is
well, yeah.
My coach step into your authorities. Y'all meeting Coach Curtis, and I'm gonna help you win.
Okay. So thank you, Coach Curtis, for giving us those plays. And again, it's important for me that we get out of this thing of just trying to get right to the do, and we don't have any context for it. Like you learning all about wills and trusts, and that's great, but you might not even be ready for that. So then you're missing the thing that helps you build to that because you're focused on what's quote unquote trending, right? And it may not be, which is why I love Curtis, because you get an opportunity in this space to personalize and not get a bunch of things that you don't need, right? And some of it is, if we go back to golfing, I don't necessarily need a certain type of golfing apparel to golf, right? And so, but I can spend a ton of money on the apparel and never learn the mechanics to even show off the apparel, right? And so then it's a waste of money because I'm doing it in the wrong sequence, right? And so, that's why I love him just overall, and I respect him a great deal. Sometimes we butt heads on things, but then we know we have one goal for our folks, and we're able to get back on track and make the main thing the main thing. And so that's why I love him in my community, and he's accessible in that way. As we get ready, so this is a 2-part series. This is going to have to be, and we're going to tee you up for the next part, which is how to establish your own banking system, because you want to be the bank in general, but two, because it's something that is available to you. But before we get there, Curtis, is this the right time to invest? I know you're following markets. I know you're following the national and international stage right now. Is this a good time to invest?
So I would say yes, but the question is, what is investing? Because what I think investing is and what your listeners think investing is different, I assure you. All right. So your first best investment should be in between your two ears. So for example, joining Terri's community is an investment. Okay. Because you have to invest in your number one asset is you. So what do you invest in? Your mindset, your skill set, and your network. So it is always time to invest. Yes, because money is a result of creating value in the marketplace. So can you invest in making yourself more valuable, smarter, so you can solve more problems for more people? Then you'll have more revenue. Right? So it's mindset, skill set, network. And then when I say invest, I use the Warren Buffett definition. So most people, to invest means to cover fully, right? So most people think when you hear investing, they're thinking, is it a good time to speculate in the stock market? Is it a good time to buy real estate? Well, that's offense. So that's Terri's job, right? But the answer always is it depends. Like it depends on the deal or the structure. There's some things that high inflation helps. You should lean into that, right? So you got to understand economics. Investing, let me go back to what you're starting about with the cohort. Investing is about becoming something. It's not about buying something. So you got to decide what you want to become, right? Do I want to become a good business owner? Do I want to become a good investor? And then what I always say, investing, Warren Buffett says that, no, but his mentor, I always ask people, they haven't heard of Warren Buffett. And they go, yes. I said, we ever heard of Benjamin Graham? They go, no, sheepishly. Some of them have, like 10%. Well, that's his mentor. So in his book, The Intelligent Investor, the first chapter is investing versus speculation. Okay. And this is a book about the stock market, but you can apply it across the board. He says an investment is something in which upon thorough investigation, you have safety of principle, right? So you investigated it. That leaves half people out right there. They ain't invested nothing in it. And, I'm sorry. Are we being honest?
We are being honest. Right. And let's deal with that, right? Because I do think that there's something important in what you said. We do not investigate things further. One of the things Curtis said to me when we started, he said, you could potentially hear a lot of noise in the background. And I said to him, well, let's do what they do in sports. You're taught to play through the play, right? And even with what I'm seeing in the marketplace and in different spaces, people do not investigate or dig deeper into something. They go with what's ever sexy at the time or what someone, was ever trending. So if it's go and buy, you could buy a property with no interest, right? The people have no business structure. They have no income producing assets. And so they get this credit card, but they don't because they don't investigate that no interest does not mean no payment. You're still on the hook for making that payment. And if you don't have anything to source that payment, where is that payment going to come from after you done did something probably other than business, right? So Curtis,
that's my pet peeve. Okay.
It's all this commingling to your point that doesn't have anything to do with anything and can jam you up. And so where you got started, you as fast as you got started is as quick as you're going to be is going to end for you, right? So I think that
I need that stuff. Like when I'm going through your cash flow, so some guru taught them how to get all this business credit. You know, make up an LLC that's not seasoned and you can get $30,000, blah, 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 blah. People don't finish the thing they paid for to start with. Okay. And then, so now they have this credit, but they don't have a business or complete the asset to generate money that should be paying the business debt off. So I've got people making six figures, but they got $50,000, $60,000 of zero interest debt, but it's still a payment associated with it, but they don't have a business that's generating revenue to pay for it. Right. And so you have to have the discipline to make the thing. You got to finish the thing. That's why I say it's about becoming. Right? Make money, right? And then you gotta, that's where it goes back to cash flow control. All right. Do you have a business? Are you tracking that money? Are you tracking your household money and separating them out and asking the business to pay for itself? And are you doing that? So that's when I get with like investors, when they call me, when I'm working with some people that come through different programs, they have no plan. They've got a bunch of bad debt. They are maybe without real coaching, their first deal is a full gut rehab. Really? I don't know. I mean, and then they're underwater. They got all this stuff came up and they tore out a wall. I mean, I just because I get all the back end of this stuff. I got to help clean all this crap up. Right. So that's why I'm the principles-based planner that works with investors and business owners, because it's not the cleanliness of let's hope the S&P does well, right? And so let me finish the other thought before I get off of it, and then I'll go back wherever you want to go. The thought when we say investing, so invest is something you put your money into. We have safety of principle upon thorough investigation, safety of principle. This is Warren Buffett's mentor, right? And you have a reasonable opportunity to make a profit. If it doesn't fit that definition, you are speculating. So most people, what they think is investing, they're really speculating. That's why I say, what's the definition? When you say investing, what do you mean? It's always a good time to invest, because you're investing in yourself, because investing is not risky. Being uneducated is risky. So if you expand your ability to solve problems, there's always opportunities out there.
Listen, I'm spot on. I love it. I teach a course, and you can invest at any time in any market, is particularly if you have a strategy and you have a business build out and you have something that is driving you. And to your point, investing to me is, what is going to give me a certain rate of return, right? And investing in yourself, you may think, oh, educating myself, don't know, because then it does, because you're developing a skill set that can then be a tool to make more money. And so I totally agree that you should be investing anytime.
I can point to a $10,000 mastermind that I joined, scared to death to write that check, that took my income to just under $100,000 to $250,000. Okay. In 12 months. Okay. So now I don't know what the ROI on that is, but that's pretty good, right? So your investing can drive that. That is your best investment.
And you definitely can quantify that. That's,
absolutely.
So you want to get in spaces that can help you, because so then that also gets you out of that space of speculations, and even with things that could occur, because markets are skittish and there's ebbs and flows, but the way to planning allows you to plan. You have contingency built in as well to that can also be,
which goes back
qualified and quantitative
space planning, right? So you're not reacting to stuff. You've got a game plan of this is what we do. When this happens, we do this. When this happens, we do that. And so as you invest in yourself and get around successful people, there's nothing new under the sun. So people are always making money. You just don't know how. And so one of the things I do, Terri, is I probably go to 3, 4, 5 events a year. I easily spend probably 10% of my revenue in personal development and sharpening the saw, get around better people. And you can't learn less, right? And I always try to be the dumbest, brokest person in the room. So,
and not only that, if you structure it and you run it like a business, it's a write-off. So you get it.
Right.
back. So investing has a ton of benefits. But as we get ready to wrap up, right? A couple things. One real quick, one word. What is something you do or love to do on your off time?
Read.
Okay, great.
Work out.
Wait, no.
Yeah.
Okay. All right. Just one. Two, we have this push towards establishing our own banking system, which I think that this was a crucial conversation that kind of prepares us for that. So I look forward to you next week. He doesn't know that, but so that we can then, now that you have a reference point and now that a foundation has been laid, now we can get into some more substantive things like establishing your own banking system. But as we go, I want you to do two things for my listeners. One, I want you to give 3 pieces of advice to, 5-figure earners, 6 or 7-figure earners in context of what you do. And then I want you to tell people where they can find you. And then I want you to sign us off. Okay. So that's 3 things. So one, give 1 and 1. 1 for a 5-figure earner, a 6-figure earner, and a 7-figure earner. And then tell us where we can find you and then sign us off.
Okay.
With your favorite quote.
Believe it or not, there is not different. Okay. So when people meet with me, they often have these problems. I'll give it to you in general. And then they're just different. They're different levels of the same problem. Trust me. Okay. They're not fully protected. They have gaps in coverages. They don't have a plan that happens to their money after they're gone, legacy, right? And their money isn't flowing well. They don't really have inefficient cash flow structure. So if you want to move to the next level, most wealth is lost by how people manage cash flow. And it starts there, so that you can save, which moves us into other strategies. So I don't care if you're making 6 or 7 figures. There's always more opportunity in becoming more efficient and minimizing the losses than just trying to pick winners.
Okay. So advice number 1,
manage cash flow. You need a constructed, controlled cash flow structure.
Okay. Advice number 2,
minimize your protection. Most people have gaps in their coverage. So if somebody were to come at you or sue you or you were to die, your plan would fall apart.
Okay. Advice number 3,
read 15, 20 pages a day of a good book and get yourself around people that stretch you and that encourage you to be more than what you are now.
Thank you. Okay. Can you tell them, aside from being in our collective at Built to Last, where can they find you personally?
So they can find me at practicalwealthsolutions.net. is our website, and we've got ways if you want to make an appointment with us, or we have a little video on a mini course on becoming your own banker. We can send you that. And also the best way is go to our YouTube channel or our podcast, but YouTube at curtismay, or just search for the Practical Wealth Show podcast. We're going into almost our 6th year of doing it. And, you want to know more about the madness that is Curtis. Our theme is kind of wealth outside of Wall Street, and then how to be the bank. Okay.
So where they're going to find you, what's the YouTube handle?
YouTube handle is at curtismay, or if the @ curtismay, or just search for the Practical Wealth Show and I'll come up.
Okay, cool. Now,
after Curtis Mayfield. Oh, no, I'm just kidding.
You know what? Okay. All right. What's your favorite quote? And then that's how we're ending. And we'll see you next week for how all of this can prepare you to establishing your own banking system, because we definitely want to move from being top consumers. And when I say us, I am my largest audience are African Americans, Black folks. And so I want to target this because we have the highest consumerism rate, but we own as the lowest in ownership rate. And so we want to position ourselves to not be dependent on these other entities, but being able to leverage them because we're in a position of ownership and owning a process. So we'll talk about how to build your own bank next week. So you don't want to miss that.
Yeah.
Curtis,
my favorite
leave us with your favorite quote. So
it's on my card. And one of the things I'll say is your economic situation is a matter of choice and not chance.
Can you say that one more time? That was good.
Your economic situation is a matter of choice and not chance. So it's not just happens to you. You can decide by how you operate what happens to you. So you want to be the captain of your own ship. and that's what I try to live by.
That's good. Well, listen, until next week, and you want to set your notifications today, like you don't want to miss, go to Terri Talks Official at YouTube. You can also find us at Built to Last Solutions on Facebook, Built to Last Solutions on Instagram. You can find me at Terri Brown Taylor on Facebook. You can find us on LinkedIn at both of those handles. But you want to be able to connect with this information so that it's not just information that you are stockpiling, but you're able to implement for yourself, for your family, for your community, and for the culture. So until next time, God bless you and stay connected. Bye. Thank you so much, Curtis. You are just amazing.
All right. A lot of fun. Thank you.
Yo, we could have talked for days, but because we want you to join us next Tuesday for another episode of Terri Talks, that's it for today. Talk soon.